It might have an immediate high to take out this particular low. Now, this low that price has taken out, this low now that price has taken out is an overall liquidity. Now, we don't know yet until we see a leg that comes to go above this immediate high. Now, this immediate high, it doesn't matter whether this immediate high didn't go below this low or what. The high could, let me say, go here, below this low, sweep it small, go up, or let me say, just stop here. Anyone it could be. But as far as price has taken out the immediate high, now this is what they call a market structure shift, a change of character. That's immediate high. When price is already in a sell format, meaning price would have been selling from here, up, down here, and then leave a low, go up, go. Now, fair value gap is used for high probability scalping trades. Do you get me? High probability scalping trades. So once this high has been taken out here, it doesn't matter whether price takes out and take out the second one, but once this high has been taken out, we are always going to see a displacement concerning three candlesticks. The first candlestick, the second candlestick, and the third candlestick. Now, those three candlesticks now, which is the first and second and third consecutive candlestick, they move in the same way. They move in the same direction. They are moving up. There's going to be a space in that candlestick. Now, the first space you see that price creates, it could be here, it could be here, it could be here. But that space that price creates, whereby there is a gap of only buyers, because this is in a buy momentum, whether there is a gap of only buyers, that space is going to be seen as a what? Fair value gap. So that space now is going to be a very active space for price to come. Why? Because you can't go to a market and see that there are only people buying in the market. Where are the sellers? Meaning there are only people buying in that market. There are no sellers. Do you feel me? So sometime in the market, the sellers need to come in to fill in that only buying space and then continue what? The buy setup. Do you feel me? Now, I've said this thing multiple thousands of times in the chat, which I'll give examples here. I've taken trades from them multiple times. The trade I took yesterday, trade I took day before yesterday, it's just using this concept alone. Do you get me? So understanding this concept now is going to give you a very good criteria of when the market is about to move and go to the other side of the price action. This is the formation you are looking out for. So I'll just give you guys 1 minute to screenshot this. Screenshot this. You should screenshot it now. So this is the concept. You're looking for a high probability scalping trade. This is the concept. So I believe we've screenshotted this. Now let me go into examples. Let me go into examples. Let's just see what we can find using what the fair value gap. Let's look from the previous chart. Okay, there's one here. Very good. There's one here. So you can see this is a high. Can you feel me? This is a high here. Now price has swept above. Price has swept above this particular high. Do you get me? Price sweeping. Price sweeping above this particular high has indicated that price, the liquidity has been swept. Now, we don't know yet until the immediate low has been taken out with a gap. Do you feel me? Now, where is the immediate low here? You can see before price came up, it created a high that retraced down. This is the immediate low. So the gap before price has this immediate low is going to be what? Fair value gap. You will always see it. Now, see where price grabs. It grabs it. Now, this is the grab of that point. Now, your high probability scalping trade is going to be where? The gap. Can you see that? Price comes after the grab. It starts dropping. Then it leaves a displacement. This displacement is very active. Can you see that displacement? It leaves a displacement whereby there are only what? Sellers in this particular market. Consists of what? The first candlestick, the second candlestick, and the third. Notice how all these other candlesticks here have no space. Only this one. Now, why this one? Because it's a gap whereby there are only sellers. So the market is trying to indicate to you now that there are only sellers in this market. So since there are only sellers in this market, what do you expect? Price to come in and fill in this selling gap before any momentum or movement to the downside. That is just the concept of the fair value gap. So you can see how price gives you that momentum. Once it takes out that low, leave the displacement, what do you see? It comes up, leaves an inducement, drops down, then finally it comes up, fills in the gap. Once it fills in the gap, this is where you are going to take your trade. This is the point of interest you're going to take your trade. Now, at this point, now you want to look for candlestick confirmations. I think I've said this multiple times. Candlestick confirmations. I will send it again to the group. Let me just send it now. Let me select. Let's select. I will send it to. Okay, I've sent it to the group. So I sent it to the group. So these candlestick confirmations now will help you to know the action that price is giving you on this particular fair value gap. So when price gets to that point, you are expecting reactions to drop. High probability scalping trade. Now, where are you scalping to? To the lowest part where price came from. Where is the lowest part that price came from currently at that point? This is the lowest part. This is the leg before price formed that fair value gap. This is where you're going to take profits. So you're going to wait for as long as price is dropping down to this extent. So you can see what price does. It goes from that fair value gap, goes aggressively, it goes down, comes back up, goes down, comes back up, and then finally it drops down to the downside. So that is the concept of a fair value gap. Now note the highest probability scalping trade must have what this thing. Not that there are no other fair value gaps here. I mean, if you are looking at the market, you see that there are fair value gaps that price is reacting from. Like let's see, you can see this one is a gap. Notice how it's only the gap is coming to fill. Can you see that as price sweeps this high here, it sweeps this high. Can you see it sweeps the high? It takes out that high. Once it takes out that high, where is the immediate low? The immediate low is this low, is it not so? So this is the low. Now notice how all these gaps now has been filled up. Can you see this gap? This is one candlestick, two candlestick, and three candlestick. Can you see there's a space in between it? So price comes out to fill in that gap. First, that gap has been filled up. Now, before this low was taken out, where's the gap that you see? Can you notice how all this candlestick, there's no gap, till this one now, there's now a gap. Now, once price goes below this low, what do you have? Another entry. It comes exactly into the gap and then aggressively drops down to the downside. Are you feeling me? So that gap now is an active point for you to watch the market fill into. Same thing happens here. Look at it. This is a high price taken out. Now the immediate low is where? This is the immediate low. Now for price to go below this immediate low, it will have a gap. Can you feel me? It will have a gap. Now where is the gap? Notice how all these points now, there's no fill gap, but you can see a gap around here. Can you see the first candlestick, second candlestick, and the third candlestick? Can you see the gap? There's a gap here. So price comes to fill in the gap. Immediately if using the gap, it drops aggressively. Same thing happens here. A high. Can you see all this candlestick? If you are going to the 1 minute, you can see that this is a high. Price sweeps the high of that candlestick. And then the low, the immediate low is going to be here. Where is the gap? Can you see the gap? So what does price do? It comes again into that fair value gap. Can you see how it's acting? Same thing happens here again. Price comes. You see this is a high. It sweeps the high. Where is the immediate low? This is the immediate low. Once it takes out the immediate low, where is the gap? Can you see the gap? It's very obvious. It doesn't fail. So imagine you understand all this fair value gap. You're going to keep having what? The entries. You're going to keep having re-entries. You enter on this gap, if you use it drops. You come, you re-enter, enter on this gap, if you use it in drop. You come, you enter on this gap, if you use it in drop. So basically now, at this point in time now, you are going to tell yourself that, okay, I can be adding more positions when price is filling in the gap because these are gaps that they are only sellers. So buyers need to buy inside to cover up that gap before the sellers continue their momentum. Now, let me show you the recent trades we took currently. Okay, so there was a trade I took that yesterday, this whole buy. I'm sure I sent it to the group. If I didn't, I did. Now, see, it's the same thing we're saying about. Now, this is a buy trade. This is the lowest point. Can you see? Now, once price, now you see that this draw in Nigeria, this draw in Nigeria here, I told you that this draw now, it doesn't matter whether price, stops here before it keeps this immediate high or even sweeps here before it forms the immediate high. If it sweeps here and forms the immediate high, then comes back to sweep this low. Wait for it to go above this high. Then once you wait for it to go above this high, you then look for the gap in this leg. Before price went above this high, you look for that gap. Then price comes back into it and go. It must go above this high, even if it leaves the gap and then comes back into fill it in before it goes above this high. It doesn't matter. You have to wait for it to go above this high. It's now once it goes above this high, it has given you the criteria that okay, price is the market structure has shifted. The change of character has happened. Because if it's taking out the recent high where the sellers were selling from, it's trying to indicate that the buyers have more momentum. So if the buyers have more momentum, you then want to see a gap in the market that whereby they are only buyers. You know that okay, buyers have more momentum, but there's a gap whereby they're only buyers. So you want to be able to wait for price to come and fill in that gap before pushing up. Now let's look at this trade currently doing. So it's just rinse and repeat. I think I saw it yesterday. I used it adequately very well. Now look, price is in a push, 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 push. Then it comes down. It has a low. It goes up here. Let's even start from here. So let's start from here. What do you see here? Do you see a sweep above this high? It sweeps. It doesn't matter how small the sweep is, but it sweeps. Is that not so? Now, once this sweep has occurred, where is the immediate low? The immediate low is here because this is the lowest point. Price takes out that low. Now, look in all these candlesticks. Look for a 3 candlestick that has a gap. Notice there's no gap here, there's no gap here. Then you now see this candlestick, first one, second one, and third one. Tell me you don't see a gap. You see a gap. Can you see that gap? So that gap signifies your what? Fair value gap. And I told you, even if price, fills it in before it comes down to this low, it doesn't matter. This gap is still active. Coming down to this low is signifying that what? Price has broken the structure or it has changed the character. So therefore, this displacement is going to be active. Now, draw it out in time after price takes out that low. Where does price react? The gap. Can you see? So it's very much active. So immediately price comes up to this gap. You see how it fills in the gap completely. And then it forms a candlestick rejection. The second one, candlestick rejection, you can enter from when the 50% of the gap and then expect that drop down. Now price drops down, drops down, drops down. Where does it come back up to again? Where does it come back up to again? It sweeps. Can you see as it sweeps this high? Once it sweeps that high, where is the immediate low? This is the immediate low. Can you see? So wait for it to go below this low. It has gone below this low. Fine. Where is the gap? You can see this first candlestick, the second candlestick, and the third candlestick. Can you see that small gap? No matter how small it is, can you see how accurate it is? It will never fail you. So you need to be very active on this gap. Now, the trade I took yesterday, I didn't take all these ones. I was just saying there. See this one. It sweeps. It then goes up aggressively. And then it leaves this what's high. Now, this high that it left, is the high we're expecting price to go above. When price starts going above this high, like this, it goes above. Notice how you don't see any gap here. You don't see any gap here. You don't see any gap here. But where do you see a gap? You see the first candlestick here, second candlestick here, and the third candlestick. You can see a very strong gap here. Can you see that gap? And I said, even if price fills in the gap before it goes above here, it doesn't matter. Because the going above here is signifying that the market has changed the character. It has shifted the market structure. So what do you expect? Price to come in to fill in this gap. Can you see how accurate it is? It won't fail you. It's a high probability scalping trade. When I post a signal, I put high probability scalping trade or high probability trade. It's this kind of setup. Even the trade I took yesterday that I posted on the group, then you guys were like, oh shit, this is a very mad drop. Where did I take it from? It's still the fair value gap. I took this buy, and this buy went all the way here. I held it up to around here. I didn't even hold it up to here when it was meant to give me $100. I just held it to here. I think someone also in the group also mentioned that, oh, he held it to here and he removed early. That, oh, Thunder and Punish removing early. I mean, it's to pay you if you remove early. But you have to understand that price must get what? Above the recent point price was coming from. This is the previous point price was coming from. So you can see the structure. It forms here very clearly. Now, it might look like, okay, gaps are the only thing that the market is reacting from. But trust me, the market cannot be balanced if a gap has not been filled up. Do you get me? You can see all these formations. You can see if it sweeps, it takes out. This gap now has not been filled up. Price will want to come, you fill in this gap. This one, it sweeps this high, it takes out. This gap has not been filled up. Price will come, fill in this gap. That's what causes all this retracement. And that's what causes all this scalp. Do you feel me? Same thing here. Price sweeps the low, it takes out the immediate high. This gap has not been filled up. Price will come, activate, and then it starts buying. So the person that removed from here, let me say, it just feels like, okay, price will come here and drop down. No, it's going to go to above the highest point price was coming from. Now, let's look at the one that happened yesterday. Now, look at this one. Let me just give you a blank eye for someone that sees. Can someone now show me an example of the fair value gap in this point of chart? This is where we're looking at. We are looking at from here to here. So in this whole point, there's a gap that starts pushing price down to this point. Can someone just picturize it and show me? Please, I would, at this point in time, I expect you guys to unmute yourself. This is the high that price sweeps up. Can you see? Are you guys following? As price has swept this high, where is the immediate low? Here is the immediate low. Price has what? Displaced below this immediate low. Now look from the beginning of the chart. Where do you see? You can see the first candlestick, the second candlestick, and then the third candlestick. Do you see a gap there? Yes, I do see a gap. Now draw this gap out in time. Can you see how active it is? This is the first candlestick, second candlestick, third candlestick. There's a gap there before price starts falling. There's even another gap here that it creates. Can you see that it's reacting to each and every of the gap? You can see that even this gap that reacted, that was here, price went first, it reacted from this gap, it dropped. So if you want to scalp, you know that, okay, you're scalping to this extent, to the low. Can you see this is the lowest point price was coming out from before it reacted from this gap? So if you want to scalp, you're entering your sell here, you're scalping down to here, you take your profits. Now, the immediate one now, you can see this leg. You can see where this whole leg started from. Where did this whole leg start from? It started from here. Is that not so? This is where the whole leg started from to this point. So if you want to take that trade off that second gap, I held the trade to here yesterday. Try to still going. I'm sure you guys knew that I held the trade to here yesterday. I sent it to the group. This is where my entry was from. I took my first entry around here. You can see immediately as price filled the gap, it formed that candlestick confirmation. It starts going down. Does it give you another structure? Yes, it gives you another structure. You can see this high. It sweeps that high. Once it sweeps that high, where is the immediate low? Can you see this is a high and this is a low? This is the immediate low. Now notice that as price takes out this immediate low, it even fails to come and take out the other low. It doesn't matter. But as far as that's taking out the immediate low, it's trying to tell you that yes, there's a high probability scalping trade. Now, where does the gap start from? Can you see that this is a very long candlestick that has a gap? Now draw it. Can you see that gap? It looks like magic here. It works like magic. So if you have to understand these fair value gaps, high probability scalping trade, you can have as much as possible trades you are going to have in the market, and you're going to make enough of money off it. Do you feel me? So these are the kind of concepts you need to work with. Coming to a trade that one of my students, Emirates, dropped, BTC. Let's falling, that this was our trade on this. You can see that price nearly came to that point of interest, but it failed to. But what was my idea of that trade? My idea was this gap. I can see that price has already swept below this low in it. Then it has taken out the recent high. Swept below this low, it has taken out all the highs. Here, it comes back again. Then it leaves a gap. Can you see this gap? The gap is very obvious. Can you see the gap? The gap is obvious. So what is this? This is the gap. So we'll be expecting price to what? Fall into this gap. This is a gap. We're expecting price to fall into this gap before any continuous push up. Do you feel me? Everything has higher probability. This is a very good question. The fair value gap, the order block, which has higher priority. Everything has high probability trade setups. If you have an order block that has inducement, it's very active. It's very active. This price now is very, this week that you're seeing here is just trading view manipulation. It's not really, it doesn't really show on everybody's chart. So it's just a gap. This is where the high stops normally. So this is inducement. So this gap now is a gap we're expecting price coming back to fill. Price nearly came there today and then we missed the entry. It starts going up. I don't know why BTC is like that. It tries to poke up sometimes. So I expect price to come back down into here and go. So yeah, for this question, the fair value gap and order block, which has higher probability, I would say for me, everything has higher probability. Do you get me? You can't displace them because you can never unsee them. If it's going to work, it's going to work. But for high probability scalping trades, when I mean scalping, you just want to take trade to the next low or the next liquidity, you are working with fair value gap. If you want to take trades to the next high to form a new high, you are working with order block. Fair value gap is those gaps that you know you are taking trades to the next liquidity. Let's go to gold and see the concepts behind order blocks and the one behind fair value gap. Okay. Let's look for a very pure proper order block, and then we see the reaction of that order block. Same with the fair value gap, then you note what the exact difference or context is behind the order block and then the fair value gap. So yep, greater ID that is in. So let's look at this. This is a setup for another block. This is a shift in market structure and then price break market structure above this high, which is the recent high, and it still goes above the previous high in it. Still goes above all this previous high here. Can you see that? So after price does that, where is the last bearish candle before price comes to do that? This is the last bearish candle, this one. So you draw from the high of the bearish candle to the low. So can you see that's another block too? So what does price do when it comes to the other block? It reacts off the other block. You take your buy. And where's your take profits? The highest point. So you take your buy from there to form what? A new high. Then you are done of the market. Now, notice how price now did not take out this high first. It left this high as a what? Recent high. And then it left this other one as a previous high. Can you see that? So what does price do once it takes out this recent and previous high? It then comes back again to the other block. Now, where is the other block? The last bearish candle. Can you see? And then does it have inducement? Yes, it has inducement. Can you see price falls back down? It feels touched the other block, but it leaves an inducement. Can you see that inducement? It feels touched the other block. So what does price do? It later comes back in, taps the other block, and then go up, comes back up to touch that candlestick that reacts of the other block, which is the proportion block, and then it starts shooting up aggressively. Can you see the concept? So order block, fair value gap, all of them have their own high probability. Do you get it? There is nothing like this one has higher probability than this one. Baba, if Fair value gap is going to give you 250 pips in profit. The same thing, other block is going to give you 250 in profit. Do you get me? This you can see. If you are buying from this other block and you target 250 pips, you don't use your 250 pips already as here. Say you are still buying from this other block, sorry. Say you are still buying from this other block and you target 250 pips. You reach your 250 pips. Is that not so? So it's the same thing. Same thing comes when you are buying from the fair value, when you are selling from the fair value gap. Say we're selling from this fair value gap and then we target 250 pips in profit. We don't reach our 250 pips. No be so. So everything works alike. It does not matter the highest probability you're working. Everything works the way it works. So you just have to constantly use them. These are the guys that you show pure strategy or thinking that shit. I really appreciate. So yeah, it's just pure concept. So yeah, everything works alike. Do you get me? Everything works alike. You don't have to denote it. See, this one is a breaker. Now, what did I explain a breaker is? You know, there are different concepts here. There's other block, there's breaker, there's value gap. Let me tell you one thing I know about trading. Trading, I've been trading for like 5 years now. But one thing I know about trading is that everything is the same. People just tend to, make their concept look as if it's different from one. They just want to make it look special, but there's nothing special. Do you get me? Anybody that will sell gold from here with, let me say, their breaker retest. Me, I'm selling gold from here with my this thing breaker, because this is a very active breaker. Can you see that this is the last bearish candlestick before price takes out this percent? Is that not so? So this is another block. Price now fails to react from this other block. It breaks it without reacting, and then once it breaks it, it tries to retrace up. It leaves what? Inducement. So once it leaves this inducement, what do you expect? Price coming back up to that breaker. Can you see how price exactly comes to that breaker? First touch, second touch, and I always tell you that third touch is the most active. Price got the third touch and then aggressively push down. Still comes back up to the breaker, then pushes that push down. Where does it go to? It goes to the lowest point. Say you want to catch your 250 pips as normal. Have you not gotten your 250 pips already? You even fell down more than 250 pips and more. Can you see the concept? So always understand that all this concept, the breaker, the fair value gap, the other block, you don't need to mix it with any other thing. The same thing that is happening on gold, the same thing that is happening on GPS, the same thing that's happening in GBP, GPY, the same thing that's happening on BTC. It's the same concept. It's the same thing that is even happening on synthetic. Do you get me? It's the same content. If you know it, you know it. You can never unknow it. Do you feel me? So you always have to know these things. You get me? You always have to know these things. So these things are just, pure concept for you to, know that, okay, this is the way the market will work at this particular time. If it doesn't form a fair value gap, okay, I can see another block. If it doesn't form another block, okay, I can see a breaker. You always have a trade to take. Do you feel me? So always have those trades. Same thing happens here. This is a breaker. Can you see that price leaves this high? This is the last bullish candle before price sells to form this shift in market structure. Can you see? So as we form that shift in market structure, do we have any retracement? Yeah, we have retracement that fails to enter it. So this retracement is going to be seen as what? Inducement. So once price forms that inducement, what do you see? It comes down exactly into the breaker. Once it comes to the breaker, boom, starts going up, comes back down, and then go. But now, how do we understand this concept now? Look at something that we are talking about. You can see that this is a low that it has finally taken out. Say you miss entry from here. Where is the immediate high? This is the immediate high retracement. Can you see this immediate high? Once price goes above this immediate high, what are you looking out for? A fair value gap. Now, where is your fair value gap? Can you see this is your fair value gap? It's very open there. Notice now, tell me why is it that price did not create any fair value gap here? All these places, there's no fair value gap, but there's a gap here. So after the price displays above this recent high, what do you see? It aggressively comes back into the fair value gap, and then what fills it? You see how it fills it accurately, and then it starts pushing up aggressively. So tell me this is not a sweet trade for you to take. Tell me it did not come back up here and continue buying. All these are just the concept we need to use. So you don't need to force yourself through understanding the chart. If you understand the fair value gap, the breaker, and the other block, you just have to learn and consistently understand to never see them. Because once you see it, you see it. If I see a breaker, I'll tell you it's a breaker. If I see a bullish level, I'll tell you it's a bullish level. If it's a fair value gap, I'll tell you it's a fair value gap. The only thing we need to do is to execute once we see those concepts. Do you get me? So basically, that's it. Let's go into today's trade and see what we're expecting before the class finish. Here, I'm expecting here to be a breaker because here is another block. This is a very good other block. But price is going to sweep this other block because this other block is not strong enough. It's not a strong other block. Do you get me? There's still a fair value gap here. There's still a breaker here. Now there's a very active breaker here that I'm looking forward to. Can you see that price takes out this low? It sweeps the low. Then it takes out the high at this point. Now this is the bearish bullish candle before price sweeps this low. What does that make this if it does not react? It makes it a breaker. So what do I see? I see a very active breaker here. So in as much as price comes here, I can see this is my inducement. So once price comes here, grabs, and then what? Activate of this breaker. Once it's on this breaker, whether it's taking, as far as price does not go below the breaker, as far as price does not go below here, I am still going to be in that trade. Price might break below here and form another structure. Maybe it might break below here like this, maybe come back up to form another structure, little maybe fair value gap structure, sweep the high, come down below the immediate low, then come down into the fair value gap before dropping down to 3,000, 3,300. That's why I expect price to go to 3,300. Honestly, I expect price to reach 3,300 because all these places are liquidity, all these places. So I expect price to go down to 3,300. Who is there now? Wisdom. Wisdom help us. So yeah. So if price doesn't react from this breaker, I expect a little, formation of fair value gap to drop down to 3,300. But this is the next priority for my buy. So I'll be definitely giving a buy around here and be expecting price to create a new high, which is above there. Because that's the next point. Stop loss just a little bit below the breaker. So this is my next trade for gold. So any progress, any questions so far? Let's see what we can round up with. Don't forget price is close to this point. So let me screenshot it. So, yep. Okay. So
I have
any
a
question?
question.
Yeah,
Can you hear me?
I can hear you.
Okay, so there's something that I noticed in Euro USD yesterday. So I saw sort of like a sweep, and then it formed like this was on a very small. This was like on M5. So it formed like this kind of inducement. It broke the high, came back, and kept those inducements, right? It didn't take them out. So I took a trade before, obviously expecting that they would take out the inducements. But what ended up happening was that he came and took out the inducements, and then I now took the trades. I added more trades anyways, since it was Euro USD. It's not like gold that will kill you, kill your account. So when the trade started going up, I noticed that the the it's I don't know whether I would say it's a pattern with the Euro USD. It left after it took out the inducement, but then it came back to take out the sweep. Okay, you see, okay, put it on 5 minutes. I don't know how I will share and demonstrate this thing, but it took out the
Hey, was it yesterday?
okay. Um, look, where is this
No, you,
pencil?
you
Okay, so this I think is this one. Can you see my what I drew?
can see.
yeah, that was where I started seeing like this kind of break here. So I saw this and I was expecting it to take out this whole whatever here. So he eventually took it out and started going up, you know, that is here. But then everything just
Came back.
tanked and took out this place I didn't expect it to take out. So I was wondering whether is it that I did not do any kind of confirmation or I did not I bought in the premium
Yes.
zone
Okay.
or
Hold on. We have less than 1 minute.
because
Can you hear me? We have less than 1 minute. So I'll have to send the link. Just activate this your page. What I see
okay,
here. Can you see this?
okay,
Can you see that broker there? So all here is going to be inducements. All these things are going to see as inducement. Can you see that there's a breaker here? Can you see that breaker? It's very active. So you see how price comes. So that tanking was for price come to the breaker. So you didn't get the POI right. Do you feel me? You see as price came to
yeah,
the breaker, it started going up because
yeah,
this is a active breaker. You can see this is a shift in market structure. And the highest went is what? The breaker. So price
okay,
is then finally it's grabbed the inducement and then came to the breaker and then started